Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today, we take up that big expectation which became one of the last major policy news announcements in 2023, which was the expected cut in petrol and diesel prices. It's the 4th of January and prices haven't been cut. In fact, Petroleum Minister Hardeep Puri has gone ahead and indicated that such a move may not be happening at least any time soon. Remember, this is an election year, but we'll discuss more on whether petrol and diesel prices are likely to be cut in 2024. But before we do that, let's take a quick listen into what the Petroleum Minister had to say earlier.
I have clarified there has been no discussion with the oil marketing companies on any such issue. And please, we are in a highly turbulent situation. Turbulent का क्या मतलब है? There are two areas on the global map which are in conflict situation. Okay? So अभी आप मान लीजिए पिछले एक हफ्ते 10 दिन में we've had challenges to shipping. मैं अपने शब्दों बड़े carefully I'm weighing them. We've had challenges to shipping in one particular area जहां से 12% global shipping traffic निकलता है Red Sea और Suez Canal से.
Well, Hardeep Puri saying that there have been no discussions, and also towards the end of that short remark talking about what is happening in the Red Sea. And we will discuss the impact of this latest geopolitical development on Indian consumers, because remember, petroleum prices at the retail level have been frozen for over 18 months now. May 2022 was the last time when petroleum prices changed, and remember, at that time we had a system of daily price changes. But to put more of this into context in terms of what really has transpired over the last several days, including those initial reports of the petroleum marketing companies considering or at least thinking about a price cut, and now when the government through the Minister of Petroleum and Natural Gas seems to have discounted any such hopes. I am joined by my colleague Chetan Bhutani. Chetan, take our viewers through what really has happened, because there was this sense of anticipation and expectation that built up that petrol and diesel prices would be cut. Remember, they have been frozen for 18 months and the expectation of a cut has been generated on account of overall reduction in crude oil prices globally. Chetan.
Well, absolutely, Siddharth. If you look at the trend of the crude oil prices, it's been hovering in the range of about $70 to $80 per barrel. However, when the reports came out of a possible price cut, the minister himself on record said that these reports sound as mischievous and speculative. And in fact, off the record, when he met us, he in fact mentioned that there are mischievous players doing the rounds who want to actually have their own vested interests. That's why such reports came out. But yes, he also mentioned that there are turbulent times in the oil and gas space. He was referring to two major parts. First was the Israel-Hamas war, and second was the attack on Red Sea. However, he mentioned that there's no such issues as far as the Red Sea issues goes in India. But he also very categorically mentioned that the supply of LNG and the subsequent petroleum products come through the Red Sea, which has been now navigating through the Suez Canal and other routes. So clearly, India, on the other hand, is not facing any issues. He says, in fact, that India has a lot more options on the table. In fact, he also mentioned about how Venezuela has opened up to supply India more barrels of oil at a discounted price, and whatever India is comfortable is for its consumers. That's the step that the government is going to take. So clearly, in the times to come, we can expect a rate cut because it's an election year, and the government could take possibly a populist measure as well.
Chetan, since you speak about election year and populism, in the past we have seen that oil price cuts have been extensively done around election time, but during the Modi government, and it's now going to be very soon the 10th full budget that will be presented by the Modi government, we have seen that changes in petroleum prices have not happened. In fact, earlier also one of these issues had come up, that petroleum prices were not changed, and then we saw a full-fledged daily price movement. What's your sense when you speak to the people in power, those who are responsible for this decision, as to when a call could be taken on cutting fuel prices, if at all, in the run-up to the election?
Well, Siddharth, in the previous instances, as you pointed out, we have seen that the government near to elections has announced a price cut when it comes to different measures. For example, the Minister of Finance announced the excise duty cut, but when I speak to my sources in the government, they tell me that certain states take it as a political measure because the BJP ruled states, in fact, announced a price cut through the excise route, but non-BJP states did not. So it's up to the government says that it's up to the government to announce the price cut, but whatever the non-BJP ruled states do is up to them. So they really cannot have much say. But yes, the Ministry of Finance and the Ministry of Petroleum Natural Gas every 15 days exchange a list and have a formal meeting or an informal meeting as well, where they discuss the price of crude and of course the global petroleum product prices with respect to the Indian prime basket. Remember, India is the third largest importer of oil and the respective petroleum products. So clearly in times to come, Siddharth, when I speak to my sources, I get the sense that closer to the date of elections, there could be a possible reduction in prices, but it could not also happen because it's up to the government and the OMCs. Remember,
Right.
Hardeep Singh Puri also mentioned that it's a deregulated sector and the OMCs do not have to report to the government for cutting the prices.
Before I let you go, Chetan, one quick point. We've seen the trend in auto sales in all of 2023. Has petroleum and diesel price played any impact on any of the components of auto sales, and has the auto industry ever raised this issue about prices remaining frozen?
So that auto industry has not really, raised the issue of the prices getting cut, and because as we see, the month-on-month and the year-on-year sales have been on record. I mean, if you see Maruti, Mahindra, Tata Motors, Toyota, all of these companies are seeing record sales. Plus, the consumers who are not really comfortable with the traditional fuel, the ICE fuel, they are moving to electric vehicles
What
and
about
strong hybrids
two-wheeler?
as well.
What about the two-wheeler segment specifically, Chetan?
So that two-wheeler space, if we talk about Hero MotoCorp, for example, in this cumulative year from January to December, sold about 54 lakh vehicles. Ola Electric, on the other hand, is having its record sales coming up. So the penetration of EVs is equally balancing out the sale of ICE vehicles. So the consumers who are not ready to pay so
So,
much higher
Chetan,
prices, they're moving towards different.
who really is then looking forward to a price cut? The answer that you gave to those questions, is the transporter, heavy trucking segment looking forward to a price cut? Who is really asking for a price cut then, if you say that auto sale numbers do not reflect any pressure on account of prices remaining at higher than current crude oil average rates?
Absolutely, Siddharth, because if you see the prices of if you see the trend of SUV sales, it's record breaking. In fact, the entry level cars sales have taken a hit because people want to move out towards the SUV sales. So clearly the consumer of an SUV is not worried about buying a petrol or a diesel vehicle. The person who are actually worried about a petrol and diesel prices is of course the rural markets, the urban markets who are recently entering into the buying of an entry level car, say for example a Wagoner or probably a SUV on the likes of a Tata Tiago or a Tata Nexon. So the people who are affected is of course the rural class and the entering urban class who are looking forward for a price reduction and a
So
subsequent
do
relief.
rural sales numbers reflect this concern?
Rural sales form a 60% share when it comes to two-wheelers, Siddharth, because if you look at two-wheelers specifically, it's always been a trend that two-wheeler sales are defined by rural sales. What happens in the states where farmers lead the sales for two-wheelers, that's when the rural economy comes into play. But that has been muted since COVID, and now we are eventually seeing a recovery in two-wheelers as well because electric
Okay.
vehicles have also come over and having their own penetration level. So in times to come, the trend would be much clearer, Siddharth.
Viewers, Chetan Bhutani tracks the automobile sector as well, and perhaps from what he says, it's clear that the government does not feel the pressure to respond in a knee-jerk fashion, and that also tells us why the government has maintained pump prices. For the record, petroleum marketing companies and Indian Oil, Bharat Petroleum and HPCL control over 90% of petroleum product sales at the retail level in India. So while they are on paper free to make changes, the government does exercise some influence, and perhaps the political reason or rationale for responding to cuts isn't there. But Chetan, as I let you go, I must also remind our viewers that when it comes to LPG prices, cooking gas prices, we have seen some tweaks, some cuts, and therefore whenever you see this news around petroleum price cuts, viewers, you should bear this in mind. Chetan, thank you very much for joining us to explain what is really happening as far as the policy decision on petroleum prices is concerned. But viewers, let's step back, and I'm going to play out some graphics from you which will explain to you the broader context of what is happening as far as fuel oil prices are concerned. S&P, which tracks this space very, very closely, has put out some data earlier today with regard to the crude oil supply position. And remember, viewers, 87% of our entire crude oil consumption is imported. We are nowhere near self-sufficiency, and that is why this push towards renewable energy, solar energy and alternative sources, which will take some time to fructify. And given that dependence on foreign sources, what happens in the global crude oil supply market is very, very significant, and that is what Hardeep Singh Puri was referring to when he spoke about the Red Sea attacks. And S&P now says something that's very, very interesting. S&P says that Russia will maintain its position as India's top oil supplier. Remember, after the Ukraine-Russia war and the sanctions by the Western countries on Russia, Russia had a lot of oil which India purchased along with China and possibly a couple of other major economies, and we were able to reduce the volatility that had crept in on account of this situation as far as crude oil supplies are concerned. Remember, over the period in which oil prices have remained frozen in India at the pump level, at the retail level, well over a 18-month period, crude oil prices have moved significantly in the same period. They had gone down to almost $78 and they also almost reached a peak of $112, $113 per barrel. And in that range, the average price of the Indian basket, we were playing out that for you as well in the current financial year, that data also on your screen. So the Russian contribution, according to S&P, is likely to be maintained at 35 to 45% of our overall imports. So Russian crude oil could be 1/3 and more, nearing half of our imports, although there are also news reports that Russia has reduced the discount that it was giving per barrel. At one point, reports had suggested that that discount was in the range of almost $15 to $17 per barrel, and that's a very, very big discount on which other senior members of the government, including Foreign Minister S. Jaishankar, have defended the decision to buy Russian oil. And there's one more very interesting bit of data that S&P has shared with us, and we'll bring that up on screen. It says that even if the Red Sea situation, which is various Yemen-based rebel forces attacking the crucial supply route through which a whole lot of goods and commodities move across the world, it's one of the most important choke points really for global trade. Even if that were to happen and Russian crude prefers this route to supply, there is a significant amount of oil at sea, which means oil which is already in tankers, those large shipping tankers that you might recall having seen. And the Caspian Pipeline Consortium is estimated to hold a very substantial amount of oil at sea. Almost 112 million barrels of oil are on the water in various ships. Now, this is a very significant quantity, and S&P says that at least 43.7 million barrels of this are destined for India, for Indian refiners. So, 44 million of almost 112 million barrels of crude oil, Russian crude oil, are destined for India, of which over 19 million barrels are in very close proximity to the Indian subcontinent. So, what Minister Puri was talking about, Red Sea disruption, there is, according to S&P, alternative available for India and for Indian refiners, and that will help prevent any crude oil supply shock, which is almost 43.7 million barrels, of which 19 is pretty nearby. One could assume that it would be at a day's distance or a couple of days distance to be unloaded at various docks. And in case there are any disruptions, S&P says, this is the supply that will be available to prevent any crude oil supply shock. And the alternative sources, including US, Latin American crude oil, may opt for another route which is called the Cape of Good Hope. It's a longer route, more expensive to transport obviously, but that is also a key. And in all of this, obviously, our continuing purchase of Russian crude oil will depend on the pricing that they offer us. So, the key headline at this stage, there are alternatives. India has a backup in terms of Russian crude oil supplies, and a significant amount of Russian oil is floating on tankers, on water, and a significant portion of that supply is available for India. So, no crude oil price supply shocks on account of the Red Sea disturbances are expected, at least as of now, as per the scenario that S&P has put out. And that therefore leads us to the original question: will petrol diesel prices be cut in 2024? Clearly, as far as the government of India is concerned, there will become a political economy need as we move closer to the Lok Sabha elections, and if there is no significant volatility or any supply shocks, then perhaps the government will be in a position to let the petroleum marketing companies tinker around with pricing. Overall, it's very clear that crude oil prices are not expected to flare up, not just on account of Russian supplies, but also on the account of the fact that the global economy is still in a bit of a weak spot. Experts expect a soft landing in the US, and one of the powerhouses of the global economy, which is China, its demand situation is also still a bit hazy, and that will keep crude oil prices low. So, there could be happy tidings. They didn't come through around the new year as expectations had built up on various news reports, but there could be happy tidings for petroleum and diesel consumers. But regardless of that, as we have told you on this show today, Indian consumers continue to purchase all manner of automobiles, and the waiting lists also indicate that prices may go up or they may fall, but India taking to the roads on their own personal vehicles will continue. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Do send us your feedback, and if there are any questions that you would like us to answer, we'll be very happy to do that. I'll see you again. Until then, goodbye.